Hi there, you're watching Buy Now, Sell Now on ET Now with me, Shriyanti Singh and Cheryl D'Souza. And over the next 1 hour, we'll get all of your stock-related queries answered from both a technical as well as a fundamental perspective. But first things first, we've got to take a look at the markets. And Cheryl, when you take a look at the markets, a sea of red is what you have.
Absolutely, another day, another day of sea of red, could say it like that. Actually, Shriyanti, very good morning to you. Not a great morning coming from the benchmark indices. No doubt, we actually started the day pretty flat, but from there on, we drifted only lower. That's your markets at this point in time. 0.6% downturn coming for Nifty, down about 140 points. Take a look at Nifty Bank. That one also is trading lower at this point in time. It's the broader markets that are underperforming the benchmark indices. Your mid-cap and your small-cap index, the pain there and the fall there is much more sharper. No doubt on an intraday basis, for Nifty, we did slip to the 4-month low. If you look at the auto, the metal counter, FFCG, all of them are trading at their multi-month low in today's trading session. We have some gainers, but very handful at that, and the gains are very measured at this point in time. So NTPC is the top gainer on the Nifty with gains about 1.5%. Remember, NTPC Green is all set to come out with his IPO. They have given the share price as well for per share at the IPO. So on back of that, you have NTPC that's perked up in trade today. But apart from that, you have Trent, which is seeing sub 1% gain, Bharti Airtel, Britannia, Tata Motors. They are the set of gainers that could be the top gainers, to put it so. But on the flip side, Eicher Motors down 3.5%, M&M down 3.3%, Hindalco, Hero Motocorp, Tata Steel, all of them seeing weak trading session. Take a look at Reliance Industries, because there has been no respite in the selling when you talk about Reliance Industries. One of the majors that is putting all the pressure on the Nifty, down about 0.9%. And on sectoral front, none of the sectors are in the positive, auto being the top sector loser and IT barely holding on to some sort of shade of red at this point in time.
Well, absolutely. And before we kickstart taking all of your stock-related queries, viewers, the number that you can write to us is flashing at the top of your screens. Do remember to write to us with your buy price in case you're already invested in a stock. And if you're looking for fresh buying ideas, do mention the time horizon then that you have in mind. But with that, let's kickstart taking all of your stock-related queries. And today on the show, we are joined by Hemen Kapadia, who's Technical Associate at DRChoksey Finserv, as well as Chokkalingam, founder and CIO at Economics Research and Advisory as well. Good morning, gentlemen. Thank you so much for joining us today. We'll kickstart taking all of your stock-related queries. But before that, I wanted to come to you, Chokkalingam, sir. I wanted to know about the realty space. What do you make of it? Because yesterday, we did see that gain coming in. It did snap that 3-session losing streak. And currently, it is clutching on to that shade of red and 1.8% losses coming in for that one. So what do you have in mind when it comes to that space?
Definitely, the realty sector has done phenomenally well in the last 2 years, not only in the stock market, even in the industry. But now all of us know, if you take a place like Mumbai, the realty prices have gone up anywhere 15 to 20% in the last 2-3 years. And definitely, along with the commodities and stock market, the realty sector also always cyclical. We have seen it in Mumbai itself in the last 20 years, 2-3 cycles we have seen. Now, in my view, the peak-up cycle is getting, tapering off now. That is why the stocks are going down. Because that is also reflected in the fact that cement demand is going down across the board. All the cement companies have posted a poor performance. Even the steel sector is going through difficult time. So these are all reflection of what is likely to happen in the realty sector. So I would, suggest that one should be very cautious in buying any realty stock now. Rather, even now it is not too late to book profits in the realty stock based on the valuation. If they don't have valuation comfort, this is the time to keep booking profits in the realty stocks.
All right, so that's the take coming in on the real estate space, given the fact that this one also has come under pressure of late, just like the rest of the market. But remember, and let's not forget that real estate sector also has been having a very good run over the last 2 to 3 years or so. Isn't that the case, Hemen? That also could be one of the reasons why it's consolidating now?
A very good morning to you, Cheryl. Thank you for having me on the show. Absolutely. It was on a rounding bottom. It took 10 years to consolidate, and like you pointed out very correctly, it's had a wonderful few years. So, the laws of gravity need to catch up. You needed a time price correction. You would term it as a consolidation. But yes, I think exactly what you said. That's what's the sector is going on. The index, realty index is itself reflecting that. So in fact, this could take a little bit more time. I'm not sure if it ends in a jiffy. It could take a few months more before we'd see the consolidation sort of coming to its end. So currently, it's in a flux. A lot of moving parts. It's going to take time and some price also.
Absolutely, Hemen. The laws of reality need to catch up, and that's the word coming in, at least about the realty sector. But I'm going to come to you, G. Chokkalingam, because we do have our next viewer who is Veni, a senior citizen, writing to us from Hyderabad, wants to know about Bank of Maharashtra, 2,800 shares purchased at a buy price of 63 rupees, also holding on to SJVN, 1,000 shares at a buy price of 153. What do you have in mind when it comes to both of these counters?
You can sell SJVN in case there is any small recovery. As far as Bank of Maharashtra is, he has entered the stock after it went up 4 times in the last 2-3 years, despite being a senior citizen. But still, he doesn't have to worry much. In my research view, the current price is reasonable price, and the bank is continuously beating the industry in terms of both the credit and deposit growth, and it's maintaining the net NPA, the lowest among the lowest in the industry. 0.2%, which is really amazing. So definitely he will get back his money even with the profits. So our research view is gold on decline. It's a good buy.
All right, very good morning to you, Mr. Chokkalingam, as well as Hemen. I missed greeting both of you all. Let me take the next query, though this is on a very recent IPO, and therefore I have to take this to you once again, Mr. Chokkalingam. It's on Bajaj Housing Finance. Sunita Rai from Bangalore has just bought the stock and is already asking whether it makes sense to average it. She is a long-term holder, but what's your take coming in on this one? Does it even really make sense to average Bajaj Housing Finance if she just invested or got allocated during the IPO?
Its book value is around 20 to 23 rupees. So even now, it is trading at more than 6 times price to book value, which is extremely stretched. So one should not, ignore completely. At margin, one can compromise on the valuation multiple, but one should not, ignore completely. So I would not buy even at current price. I would be very happy, to buy if it is available at 4 times price to book value, because the whole housing finance segment also getting crowded and more competitive. So I would, suggest a hold. In case it goes close to 100 rupees, then one can consider that too only for medium to long term.
Hemen, I'm going to come to you with the next one because we do have Vignesh writing to us from Bangalore, wants to know about Dr. Reddy's Labs, holding 220 shares at a buy price of 1,300. What do you have in mind when it comes to this one then?
A very good morning, Sianji. We've walked into a corrective phase. I mean, we've had a very clear bout of outperformance, and now we seem to have walked into a correction of a greater degree. So if you have a longer term point of view, longer term, I mean, at least 15 months or so, I think then you're safely ensconced in a longer term uptrend. We're on the cusp of entering an intermediate correction. So in that intermediate time period, we are going to see time price retracement. Simply put, chances of it coming down some more are pretty high. So needs to keep that in mind.
All right, so that's the take coming in on Dr. Reddy's. Let me take this next query then, and this one is coming in from Ramesh. He's writing to us from Chennai, and he's saying that he's made various attempts to write to us and hoping to get some mid-cap and small-cap ideas from our fundamental analysts. But the time horizon is just 1 year. Do you also believe, Mr. Chokkalingam, given the fact that the volatility in the market is as such, that 1 year is the new long term, or you still believe that it has to be 3 to 5 to 10 years that you can actually construct as a long term investment?
Yeah, there is a structural change in the market itself. Today nearly 20 crore investors, out of that 15 crore investors have come last 6-7 years. So they have redefined everything. I mean, long term, I would not now suggest for 5 to 10 years, because more of perception driven rather than EPS driven, in the short term now. So you can't keep advising for 5 to 10 years. Definitely 1 year also reasonable time frame, because rewards and punishment would happen very fast because of the entry of a lot of young investors, tech savvy investors in executing the trades. So coming to a specific question, yes, I believe 1 year is a reasonably good time period now, because If you look at the small and mid-cap index constituents, they have lost almost nearly 30 lakh crore from their peak just in a matter of less than 2 months. So therefore, 1 year can be a good long term. And I could suggest some of the stocks like Nesco, which is always my pet stock, which has not performed well. We personally hold, company family, Nesco. Second extraordinary stock which I consider is LG Balakrishna Brothers. This amazing stock corrected a lot, and it caters to two-wheeler segment, which is still not, getting affected by the meltdown or slowdown in the automobile sector. Third stock is Cyient Limited. I am quite excited about their semiconductor business. For a 100% subsidiary of Cyient has got into semiconductor. And lastly, Balmalari company is corrected a lot. 2 days back, the company has announced rail logistic in collaboration with the SAIL. This is another stock we also personally hold. These are the four stocks I am extremely bullish for 52-week time period itself. I may be wrong, but I am extremely bullish on these four stocks.
Not one, not two, but four recommendations coming right there from Mr. Chokkalingam. But I'm going to come right back to you because we do have Mohit writing to us from Ludhiana, wants to know about Star Health. Has 200 shares purchased at a buy price of 590 rupees. Looking at a time horizon for 3 years, what do you have in mind for this one?
It's quite surprising that the stock has underperformed badly, but it's a good stock, no doubt about it. But then this market, as I mentioned, punished a lot of quality stocks as well, because in insurance, health insurance or life insurance, the competition is huge now. There's so many players have come in, and it's going to be very tough, to make a substantial wealth. Yes, it can give you 10-15% return in the medium term, but beyond that, I doubt. But then, considering the market fall, I would recommend, based on my research strategy, some of the stocks which have been beaten down, but which have potential to even give 50% return or 100% return in 1 to 3 years. So those kind of thematic ideas, the investor should consider.
This next query that I have is coming from Pratyusha, writing to us from Hyderabad. Hemen, coming to you. I know I've made you wait for a while. 200 shares of Ambuja Cements is what she has in the portfolio at a price of around 630 rupees per share. She wants to know whether she can average at this price of around 550, 548 levels.
We remain in an intermediate downtrend, Sharon. So I think if the investor wants to average, I think average with the understanding that we are going to see further downside, probably till 520 and even more. So you would have to ride this entire move down and then the way up. So I wouldn't be in a rush to average, and if I were, I would probably buy 1/4 or not 1/4, probably 1/3 of what I have, with the understanding and the thing that we are going to see more downside.
Alright, then don't be in a rush to average out, at least when it comes to Ambuja Cements. But time for a very quick break. Then when we come back, we'll continue taking all of your stock-related queries, viewers, so don't go anywhere. Welcome back. Thank you so much for staying tuned in. Well, let's get some of your stock-related queries answered, and let's continue taking all of your stock-related queries. Then we do have Venkat Rao writing to us from Visakhapatnam, Hemen, and he's writing to us about Maruti as well as M&M. He wants to know if there's a good entry price that you have in mind. Then
we'll start with Maruti first. Auto index has had a phenomenal move. I think it's going to take a 6-month breather, if not more. So we walked into a correction of a greater degree, and some of these indices, coming especially to Maruti, it's bottomed out in March 20. So it's a 4-year move. Long story short, supports come in at 10,800 Shreyashi. Next support comes in at 10,000. So these are the two levels which our investor can use to buy. Once again, we remain in a downtrend. So please keep some more money liquid, assuming you like the stock fundamentally, with the assumption you will probably need to add or will get a chance to add more. M&M is one of the strongest stocks. 6 months, market has wobbly for the last couple of months, has gone nowhere. Supports to buy, 2650 is the first level, 2450 is the next level. Cheers.
Let me take this next query then, and this next query that I have. Actually, before I take a query, I think I should actually let out Ghosh Dada's message to both of our experts, because he's a regular viewer and almost every alternate day you will actually hear me talk about his query that he has for our experts. But today, his messages, I like both your analysts. They are very good and very good advice. No questions to ask, just listening to them is a pleasure. He's also saying that he's known you guys for the last 15 years or more. So this is a compliment coming for both of you, Mr. Chokkalingam as well as Hemen. So I thought for once, instead of just throwing queries, I should actually throw compliments at you all as well.
We thank him a lot. Thanks a lot.
Absolutely, Mr. Chokkalingam. Hemen, you have any kind words?
Thank you so much, Cheryl. It feels good. So something like this really cheers your day in a morose and dull market. So yes, thank you for the kind words. And it's nice to hear somebody appreciate. Okay, we are also under stress when we give a view. Millions of people are watching. So we need to be very circumspect and precise. Thanks so much.
Absolutely. And it is a job that could also say sometimes this thankless job, because you cannot actually predict which way the market will go, isn't it? Because you thought everything is going great for the markets, and there you go, you have a volatile condition, and then you have this sort of a correction coming to the market, and it really does make a lot of the investors jittery, and especially at a time when you have so many IPOs also coming in. And talking about IPOs, my next query is on that, so it's for you, Mr. Chokkalingam. This one is coming from Devendra, who's writing to us from Vadodara. He has 9 shares of Vare Energies, which he got allocated in the IPO. He wants to know whether he should hold or look to book profits out of it. He also wants to know what's the future of this particular company. Vare Energies, it actually listed at almost double the price of the IPO. What's your take? Do you think he should book out right now or stay put because of strong fundamentals?
We gave a sell call on this. We suggested a subscription to IPO, but we gave sell call. We closed the call. I believe even after fall, it hit a peak, very high peak. From there, it has corrected. Still, it's a good sell. Let me tell you that in the stock market, last 40 years, always the bull run happened in terms of thematic fashion, and that attracts a lot more people to enter the industry. And that's what exactly happening. If you take the solar space, there are so many numbers. It used to be just 1 or 2. Now there are so many numbers that will kill the margin in the industry. I'm pretty confident. It may rise tactically. Perception-driven rally could be there. So one can use such opportunity to book profit in Vare Energies.
Absolutely. Thanks for that take coming in there, Mr. Chokkalingam. I'm going to come right back to you, Hemen, because we do have our next viewer who's writing to us about Hindalco. 400 shares is what he's holding on to at levels of just about 700. Siva, who's writing to us from Chennai, is the one who sent us this query. What do you have in mind when it comes to this one?
Hold if it's probably 9 months or more. Hindalco actually gave a breakout and went the other way. Surprising. But nevertheless, support comes in at 610, 550. We've entered into an intermediate correction. I think 610 is very strong support. I'm assuming that holds, otherwise it slips down further. But yeah, yes, in a market which is jittery, I think some of the metal stocks are corrections in a bull market. So once again, if it's a slightly longer term view, some of the metal stocks look better. Hindalco has moved up a bit, but it's still not that as bad as the market. Yeah.
All right, so that's the take coming in on Hindalco. On that note, we slip into a break on this edition of Buy Now Sell Now. More queries on the other side. Don't go anywhere. And also a quick note for all of our viewers. It is a Wednesday, so we have Women's Special Wednesday edition with my colleague Kavita, who will be joining in with a very special guest. So don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, show where we get your answers for all of your stock-related queries. It's not just the equity markets that's in the tizzy. It's been also the rupee or the rupee market also that's been under pressure of late, and it is once again hitting a fresh record low level versus the dollar. Remember, the dollar index is also at a 1-year high, and you can see that ripple effect on the other set of currencies, I beg your pardon. But with that, let me continue taking the queries then. This one is coming in from Sagar, and he wants a combination view on Colgate. Apparently, he shorted this counter at the level of 3,660 rupees per share. He wants to know whether it's good time to book profits or no, or do you sense another leg of correction in this one, Hemen? And once you've answered the query on technical front, I will pose the fundamental query of this particular stock to Mr. Chokkalingam. So, Hemen, what's your take? He's shorted the counter from the levels of about 3,660. Book profits or more leg of correction left?
Firstly, congratulations to him. That's a brilliant short share. That's a lovely position. First support comes in at 27.50. We're almost there. Next support comes in at 100 rupees lower. So currently, except that is deeply oversold, there is absolutely no sign of a recovery yet. But normally these corrective bounces against the main trend are pretty savage. I'm assuming he's got more than one lot. If he has, then he can book partial profits. Otherwise, I think he can continue a bit, keep a protect profit of 28.40 closing in the cash market. I think there is absolutely no sign of a reversal yet. Further downside seems to be on the cards.
Further downside seems to be on the cards when you talk about Colgate, given the fact that you have the entire consumption pack that's under pressure. Mr. Chokkalingam, coming to you for the fundamental part of the query then. What Sagar wants to know is that the India consumption story seems to be already going due to the inflation and the lower demand, especially when you talk about the urban and rural spending. Also, there is a tepid rural demand also right now that we are actually seeing. So he wants to know, do you see a moderation coming in, or do you see this as a seasonal impact, as well as how should he be placed when he is taking a call on Colgate right now?
Yeah, it is. It is true. The entire FMCG sector is getting impacted by, food inflation, consumer inflation, as well as some companies' input inflation. But surprisingly, Colgate has come out with a decent performance in relative terms if you compare with other FMCG companies. And still, the stock has fallen, maybe because of the overall stress in the market. But otherwise, at this price, it looks good to me fundamentally. There is one more reason, apart from relative better performance in Q2. The second reason is that oil price has crashed. Despite having two wars in two regions of the world, oil price is down 22% from the 52-week high, which is highly positive for Colgate because some of the inputs are derivatives of oil that is required for packaging the product. So therefore, I believe probably unless the market falls very badly, this could be the quite attractive price to buy Colgate even for the medium term.
Well, absolutely. Mr. Chokkalingam, I'm going to come right back to you though, in fact, because we do have Venkat Jala writing to us from Hyderabad, wants to know about Aarti Drugs that he has 1,600 shares of and 200 shares of Aarti Industries as well that he's holding on to. What do you have in mind when it comes to both of these counters?
Aarti Industry, I saw the results. I think the entire chemical sector is getting impacted very badly in India. There is no visibility of a quick turnaround for many of these chemical businesses. So therefore, in case somebody is losing heavily, maybe one can hope. Otherwise, fundamentally, even at this price, it's a sell only. Aarti Drug, it's a hold.
This next query that I have then is coming in from Thomas George. He wants to know if transformers and rectifiers is a good buy for the long term at current market price. What's your take on this one, Hemen?
Transformers and rectifiers has had a very, very strong move in the past. Coming to the current level, we've walked once again. I mean, it's the rest of the market. We walked into correction. We just posted a fresh all-time high 4 days back. So the setup from a longer-term point of view, we remain in an uptrend, and we probably have been for the past, the way I see it, 4 years and counting. So currently, support comes at 880, 820, 780. So these are the two levels to keep in mind. Once again, if you're buying in such a volatile market, do not do lump sum buying. Spread your purchases. You would get chances at lower levels.
All right. right, then spread your purchases. That's the verdict coming in, at least on transformers and rectifiers coming in from Hemen. I'm going to come back to you, Mr. Chokkalingam, because we do have Kalyan, who's writing to us from Chennai, wants to know about Chambal Fertilizers that he bought at a buy price of 521 rupees. Now, he's not mentioned how many shares he's currently holding on to, but 521 rupees is his buy price. What do you have in mind when it comes to this particular counter?
So the results is quite decent. It is a hold, Chambal Fertilizer. Target could be somewhere around 530 rupees for Chambal Fertilizers.
That's the take coming in on Chambal Fertilizers. This next query that I have is coming in from Vamsi, writing to us from Andhra Pradesh. Wants to know about LIC, 60 shares at a price of 840 rupees per share. Wants to know whether it makes sense to add some more at these levels or wait for a further correction. And if wait for a further correction, and what's the right entry level if you think Hemen is for LIC?
Shall I wish I had more data, but whatever we have, 880 is the first level, which I think is very strong longer term supports. My assumption is it might not hold this time around. If it doesn't, then 880 and 822 levels to buy. I mean, realistically speaking, it's almost virtually impossible to catch tops and bottoms, but these are the two levels you can look to buy once again in bits and pieces, not everything at one go.
Well, absolutely. So that's the take coming in. As far as LIC is concerned, Mr. Chokkalingam, I'm going to come right back to you because we do have Akshar, who's writing to us from Pune, wants to know about a couple of counters, and the ones that he has on his radar are SBI as well as Tata Motors. Now, in terms of SBI, he wants to know if he should be putting in capital in that particular counter, and he also wants to know if you have any targets in mind for Tata Motors, or what do you think in terms of at least a 1-year horizon when it comes to this particular counter as well?
After the fall, even now, I would give a sell call on Tata Motors because suddenly the automobile sector started losing its steam, and SUV was helping the entire industry in terms of strong double-digit growth. Even that SUV has come down to single-digit growth for many. I think at least for 1 or 2 quarters, the pain would continue for passenger vehicle industry. So therefore, I would sell most of these passenger vehicle companies except M&M because it is quite diversified across various verticals. And as far as SBI is concerned, it's a hold. Definitely with view of 1 year to 2 year, it's a good gold. On decline, it's a good buy. Despite industry going through some of the headwinds in terms of credit growth slowdown as compared to last year, SBI is doing reasonably well, and also in terms of price to book value plus the SOTP value of its subsidiaries put together, it still looks very attractive. So one can hold and buy on decline SBI, sell Tata Motors.
So that's the view coming in on Tata Motors as well as SBI. Let me take this next query coming in from OSN Reddy. He wants to know about Asian Paints, 25 shares at a price of, not giving the price, but he's at a 12% loss. He wants to know whether he should average or exit. And if exit, should he go ahead and look to buy Asian Paints or some other stock for the long term? Hemen, what's your take coming in on Asian Paints? 12% loss is what the viewer is sitting at.
Yeah, well, at the risk of sounding like the prophet of doom, the technical picture is really gloom and doom. It's broken down from a 3.5-year consolidation phase, which was between 2,600 on the downside, 3,600 on the upside. A small dead cat corrective bounce to 26 or maybe 2,700 is possible. But the way I see it, even the quarterly charts have taken a hit. I don't see anything positive for the next quite some time. So he'll have to book a loss and sell on bounce. I mean, this stock is in a 35-year uptrend. And if we do correct something like that, I know that sounds too far away, but if that happens, okay. Even now, there's nothing technically positive on the longer term chart to sell on bonds.
All right, so dull outlook is what you have at your hands when you take a look at Asian Paints, but I'm going to come right back to you, Hemen, because we do have an investor, Seva, who's writing to us about IndusInd Bank, wants to know about his 70 shares that he's purchased at a buy price of 1,450 rupees. He wants to know if he should at this point take out all of this capital, exit, and look for other options, the likes of SBI, HDFC Bank, Reliance, or for that matter, Infosys. What do you have in mind when it comes to this particular counter?
It's been a abysmal underperformer, Shreyashi. If you look at the levels, it peaked at a high somewhere in August 18, the Bank Nifty, or even the Nifty, and many stocks, Shreyashi, or maybe State Bank, ICICI Bank, they all posted fresh highs. This stock hasn't come close to it. So over the last 6 years, it's underperforming. That hasn't changed. So I would say a sell on bounce. I think if you want to buy something, uh, something like maybe an TCS Infosys or State Bank would make sense if you were to shift. HDFC Bank and Kotak Bank are two stocks which have not moved for 4 years. So I'm not sure when that breaks out. But yeah, Bajaj Finance is another stock which you can consider to convert from IndusInd Bank.
All right, so that's the take coming in on IndusInd Bank and the alternatives that one can look at. But on that note, thank you so much, Mr. Chokkalingam, as well as Hemen, for being the part of the show and resolving all of the stock-related queries. And viewers, on that note, we'll slip into a break on this edition of Buy Now, Sell Now. But when we come...
If you like this video, then like, share and subscribe to ET Now.